A very important topic for the business students. In that class, in our books, I'm going to talk about the chapter 1, which is audit environment. In this chapter, what we are going to learn about that, first of all, we will explain the need for independent audit, and we will explain the relation between the accounting and auditing. We will explain the audit and other related concepts. And also, we are going to talk about that, the type of the audits and auditors. There are 4 main learning outcomes that I'm going to talk about in this chapter. So, let's talk about the historical background of the financial audit. How it becomes, it becomes important. And what is the historical background of the audit is very important issue also, because we must know the when it first announced for the business environments. Therefore, why do we need audit? We will gonna explain. For the historical development of the financial audit, one view from 2 perspectives. One is national, another one is international. It is seen that it has an international dimension dating back to 12. It has an international dimension dating back to 1289. The term of auditor, the first we face with in 1289. So the first organization of audit accounting auditors we are facing in Venice, in Italy, which is in 1581. Another historical development, we see in England, which is in 19,000. And in 19,000 in England, the audit companies established, which is a limited liability companies, were obligated to audit. After that, we see the first audit firms in England, which is 1845. We call them as a Deloitte Touch company. In USA, the legal basis of the profession took place in New York in 1896. And the first financial statements audit by the CPAs in USA, it happens is 1901. So all these developments come until 1930s in USA, and in 1930s we can face with the independent audit in the first stage. After that, until the 19,000s, we are dealing as an audit in document control approaches. After that, from 19,000 through to 1930s, we are dealing with financial statements audit approaches. After the 1930s until today, we are dealing with the system-based audit approaches. After that, after the 2000, the audit changed the structure, and it becomes risk-focused audit approaches or risk-based audit approaches. Now, we are just concentrated in the independent audit with risk-based issue. So this is a very important challenges in the audit environments. Why do we need audits? We need audits, independent audit, because there is 2 important functions we are dealing with it. The first one is choosing between economic resources and measuring the success of the using economic resources. There are 2 important functions that we are dealing with it. So in the companies, there are some there are third related parties. Who are these? We call them as a decision makers or information users. Decision makers divided into 2 categories, because these groups are using the accounting information and they are making the decision, but they want reliable information. They want correct information. Therefore, they need audit. Who are these groups? We divided these decision makers into two groups, one an internal, another one external. Internal groups is in the companies. External groups is outside of the companies. These internal decision makers, they are owners, shareholders, management, employees. And the external decision makers, they are third related parties also. They are investors, creditors, government, customers, suppliers. So these groups, there are 8 main groups as a decision makers. They are using accounting information to make a decision. But when you make a decision, you wanna trust this information. The information must be correct and reliable. So can they be make sure is it correct or reliable? They cannot. Therefore, in that case, they need audit, independent audit, to increase the reliability of the accounting information. Then they can make a correct decision. This is the issue for the decision makers. So therefore, for these decision makers, they need something reliable. So independent audit help them to increase the reliability of the accounting information for them. There is a relation between the accounting and auditing. What kind of relation? Independent audit, of course, is kind of umbrella. But under this umbrella, there is an accounting information system in the companies, which this accounting information system produce the accounting information, which is the outputs of the accounting information system. These are financial statements. So to prepare the financial statements in the companies, we need financial accounting. Financial accounting deal with the outside the decision makers who is outside of the companies. Corporate accounting, cost accounting, management accounting. These are like corporate accounting, cost accounting, management accounting. These are serving to the management side of the company. But financial accounting serving for the outsider. Therefore, when all these 4 types of the accounting data come in together into the accounting information system, and after that there is an output, which is financial statement and footnotes, and these financial statements and footnotes must be audited. So independent audit comes as a need of the decision makers. So the independent audit is cover all these 4 types of the accounting as an umbrella, but they are related to each other. They cannot work by themselves. In the accounting, the relation between the accounting and auditing, as we must understand the importance of the quality accounting and independent audit. What is the importance for this? For as an accounting, as I mentioned it before, in the companies there is an accounting information system. This system produces the financial statements and footnotes, and these financial statements and footnotes using by some decision makers, and they're making a decision. So accounting and audit help the economic growth of a country. Therefore, how the economic growth, we are helping for economic growth, there are some main case for this. Accounting audit create financial stability, and they also for the private sector developments, they are providing some employment, and also they are helping to develop of the capital markets in the countries. So for these reasons, accounting and audit establish the criteria, of the stability of the financial issue in the government, in the country. Therefore, every country needs accounting and audit because of the financial stability, because of the economic growth. So if you establish a reliable accounting information system, if you support this accounting information system with a strong audit environment, so which means you help your country for the economic growth issue. So what is the benefits of independent audit? There are 6 main benefits that we can get it. The first of all, audit provides correct flow of information. And the second one is audit helps to make prediction and analysis. And the third one, audit indicates whether the financial statements reflect the truth. And the fourth one, audit helps business management and employees to prevent cheating. And the fifth one, with auditing, enterprise to find low financial cost financing. And the last one is also the rights of all partners are better protected in a company. So there are 6 main benefits or advantages for the decision makers, for the economic environment, for the companies. These benefits getting from the independent audit. Independent audit concepts, there is some concepts that we are using in the daily life, in the business life, but they are not really matching with audit concepts. The first concept, which is control. Control is beginning of the audit or the activity that precedes in audit. This is not an audit. This is just a works done at the beginning of the audit. So control concepts is not the audit, same as the audit meaning. Inspection. Inspection is the examination to find out the truth of something or whether things are being carried out well. Inspection is a technique for the audit evidences. Therefore, it's not an audit. It's not the same meaning as audit concepts. Inspection is not an audit. Revision is to review, to examine again the examination of financial events and tax accounts or documents, so on and so forth. Revision is not an audit. Revision usually concentrated for the tax concepts, tax issue. So it's like tax audit maybe, but it is not the audit, not the independent audit really. This revision concept is not describing the audit. Audit is as a concept cover all 3 of them. Control, inspection, revision, covering by the audit concepts. But the audit concept is not equal to one of them. So we must really understand. Sometimes in some books, the people using like these concepts, same as audit concepts. But it is wrong usage. It's not the same meaning as audit. Auditing, what does it mean audit? If this concept is not audit, what does it mean audit? Audit is a systematic process by which a competent, independent person objectively obtains and evaluates evidence regarding assertions about economic actions and events to ascertain the degree of correspondence between those assertions and established criteria and communicating the result and interested users. So this is the definition of auditing. So an audit is the independent examination of financial information of any entity, whether profit-oriented or not, and irrespective of its size or legal form, when such an examination is conducted to express an opinion thereon. Auditing as the accumulation and evaluation of evidence about information to determine and report on the degree of correspondence between the information and established criteria, and it should be done by a competent independent person. Under these explanations, but we understand that audit is a systematic process. Audit topics is the financial statements and footnotes. Of course, audit must some criteria, established criteria. These are generally accepted accounting principles. And as a works of audit, as a process of audits, we are accumulated the evidences. We will gonna evaluate these evidences. After that, we come out with a result, with an opinion. So this opinion will gonna be communicate to the decision makers in the written audit reports. So this is the audit definition, audit concepts, and audit process, what we do in the independent audit issue. Independent audit concepts, as I mentioned it before, there are four main criteria, four main concepts that we can explain the independent audit. What are these? We must first understand the subject or the topic of the audit. Our subject is the financial statements and footnotes, which is coming from the company's accounting information system. And what is my criteria as an independent auditor? Generally accepted accounting principles and international financial reporting standards, IFRS or IAS. So what am I gonna do? I'm going to collect or accumulate the evidences, but the evidences must be accumulated in a systematic way and independent way, and these evidences must be reliable. Then after that, I will evaluate these evidences. I will come out with a result, and this result is my opinion as an auditor. So this opinion, I am gonna write an audit report. So the audit report must be written. So this audit report I'm gonna submit to the decision makers. There are four main important concepts that we are dealing under the independent audit definition. Independent auditor. What is the process of independent audit as a general structure? First of all, financial statements of enterprises of a company. On the other side, we have established criteria, which is generally accepted accounting principles. Between that, there is a systematic process that we call it as a accounting information system. So between these two items, the financial statements of the enterprise and the generally accepted accounting principles, there is under the systematic process. We need to determine the degree of compatibility between these two of them as an independent auditor. We need to collecting and evaluating the evidences, and we are reporting the result to the executive board of the business. So this is the independent audit process, general structures. Of course, when I talk about the independent audit process, there could be some inputs, there could be some outputs. So for the inputs, unaudited financial statements and the footnotes, these are inputs for the audit process. And the audited financial statements and footnotes plus audit reports, these are the outputs of the audit process. But in the audit process, we have a different schedule, different steps that we must follow as an independent auditor.